Be Wealthy and Smart, episode 1136.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about 7 ways to create wealth during the crypto dip. Because right now, there's great opportunity in our midst. But it's easy to get caught up in fear, uncertainty, and doubt when the crypto markets pull back. So I'm going to give you 7 strategies that you can do while we're in this crypto dip. Some people call it crypto winter. I don't know if it's crypto winter, but we do have these regular cycles where cryptocurrencies pull back. And then we have cycles where cryptocurrencies take off and go much, much higher. So these are things you can do while the market's down to take advantage of these lower prices. Number 1, you want to stay calm. Cryptocurrency markets are more volatile than stock markets, both on the upside and on the downside. So dealing with that volatility is just part of being a crypto investor. But you have to psychologically prepare yourself for the volatility and not get scared. But also, you want to own quality so that you know that your cryptocurrencies are going to be the survivors when many others may not survive. And we'll talk about that in just a minute. Because first, I want to share with you a little bit from my book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. This is from Chapter 9 on Asset Allocation and Risk. Cryptocurrency is the most volatile asset I have ever invested in. It is much more volatile than internet stocks were, and I thought those were volatile. They don't hold a candle to the swings in crypto. It can be exhilarating to experience your money doubling quickly. I've never experienced anything like this. When you consider the upward moves in cryptocurrencies in 1 year, of course, it is going to have downside fluctuations too. Investments that are volatile on the upside have traders who are constantly trading on the up and down moves. As we talked about in the last chapter, that doesn't mean you have to. Quite the contrary, I encourage you to do your homework about why you own something and then hold it through the ups and downs. As Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. Many people get impatient if their investment doesn't start climbing immediately. Being able to have confidence in the midst of fluctuation of value is the most important trait to have as an investor. Digital assets are much more volatile than stocks, but that makes sense because the returns are so much higher. If $1,000 can grow to $300,000 in 5 years, do you think it is because it's easy? Do you think it's because everyone and anyone will be able to stay confident while the crypto price acts like a bucking bronco? Not likely. Unless you have a firm understanding of what you are invested in and why, and strong support to keep you holding, you may fold even if you have a winning hand like a royal flush of digital assets. People lose confidence in their ideas when value declines. It gives them FUD, fear, uncertainty, and doubt. They start to doubt their decisions because they don't see the market price confirming their decision that it is a good investment. They think, I was wrong. Or worse, I made a mistake, simply because of the fluctuating price. This has nothing to do with you being right or wrong. The market is driven by algorithms that are trading bots designed to discourage humans from holding on. Hedge funds hire psychologists to study human emotions. They know how to drive a price up and then drop it hard to evoke panic. This allows them to make money in both directions, whether crypto is going up or down. You have to know what you own and have confidence in what you invested in to stay the course. All right, number 2, create a strategy. Know which cryptos you want to collect and why. Which one do you want as your largest holding? Which one do you want as your second largest holding? This is the perfect time when markets are down to really decide what you want your portfolio to look like and which cryptocurrencies you consider most important to your portfolio's future growth. You don't want to leave that at random, that you just have a hodgepodge of different cryptocurrencies and you haven't thought about which one you want as your largest holding. You want to really think about that, have a strategy, and focus the most money on the cryptocurrency that you really believe in the most. Number 3, buy the dips, but do it gradually. A wise investor once said, "Money is made in bear markets. You just don't realize it at the time." And that's so true because you're buying low in a bear market. You're buying at these bargain basement prices, and that is going to make a huge difference when the market goes up again. There's plenty of dips in cryptocurrencies, so you don't want to rush in and spend all your money at once. You want to invest over time, and that will help you average down and get your average price that you've purchased your cryptocurrency at the absolute minimum. Number 4, you want to set some low limit orders. Sometimes markets go down more than we expect, and you can put a low limit order in below where you think the cryptocurrency might realistically trade. If we have a sudden spike down, which can happen while you're sleeping at night or while there's some fear in the market, the sharp spike down can trigger the buy order, and you can buy at a very low price. There again, averaging your cost basis lower for what you paid for your cryptocurrency. Number 5, you want to get educated while you wait. Learn about which cryptocurrencies have real utility, because there's about 20,000 cryptocurrencies out there right now. And as Brad Garlinghouse, CEO of Ripple, said, not all of those are going to survive, and the vast majority probably won't. Why? Many of them don't have a utility. They don't have a reason for being. They don't actually do something, and they don't have a very large community following. But there are ways to identify the cryptocurrencies that have real utility and that I think are going to be part of the new financial system. You know that my favorite cryptocurrency is XRP, and that's because it went after the largest utility, I think, in existence, and that is cross-border payments, remittances, and being that bridge between any two things of value that can convert from one into another. Number 6, HODL, or hold on for dear life. We have to be patient because we're so early in this trend. We don't have official laws, and Congress is working on that, but they're not solidified yet. When we do get laws, that means more and more institutional investors, the big wave of money, will be able to come in and invest in cryptocurrency, and that's going to be very good for us early investors. Someday, we'll be using crypto every single day for different reasons, and to buy things, and for staking, and for earning, and for investing, and for payment. We'll be using crypto in our life regularly, but that's not where we are today. Today, very few people on the planet actually own cryptocurrency, and there aren't a whole lot of uses for it yet. But as we get further down this decade, we're going to see a massive shift, and we're going to be using it on a regular basis, in my opinion. So we are so early. The best thing to do is just hold on through this volatility and keep the quality cryptocurrencies in your portfolio. And number 7, while we keep them in our portfolio, we remove them off of exchanges. Right now, we're seeing a lot of volatility from the Terra Luna debacle. That was an algorithmic stablecoin that had problems. We've had Celsius have some problems. We have a crypto hedge fund called Three Arrows Capital that declared bankruptcy. And some of that leverage is spreading to other exchanges such as BlockFi that have had some liquidity issues. We don't know how far this can continue to spread, so it's very important that we move our cryptocurrency off of exchanges more than it's ever been. Remember the phrase, not your keys, not your crypto. That means if you don't have the keys to your cryptocurrency, you don't actually own it. And that's why when we've had some airdrops, unfortunately, some crypto exchanges have kept those airdrops that should have gone to the people that bought the crypto. But because their cryptocurrency keys were still on the exchange, it really belonged to the exchange, and the exchange decided to keep those airdrops. Now that's completely unfair, and I don't agree with that. but we have to get our cryptos off of the exchanges into our own wallets, and that will alleviate that from happening again. Whether you use a software wallet like the Trust wallet I like a lot, or the Lobster wallet for Stellar, or the Zum wallet for XRP, and the XRP Ledger cryptos, those are all free for you to use. The Ledger Nano and the Decent wallet do cost a bit, but they are my favorites, and they are the highest security that you can get. So if you're going to be investing in crypto, you should also invest in a cold wallet. Now, a Decent wallet and a Ledger Nano don't hold every single cryptocurrency, so you have to do some research and see if they hold yours before you go ahead and invest in them. But I sleep very well at night knowing that my cryptocurrencies are tucked away in my cold wallets, and I want you to as well. So in review, our 7 ways to create wealth during the cryptocurrency dip are: number 1, stay calm; number 2, create a strategy; number 3, buy the dips; number 4, set some low limit orders; number 5, get educated while you wait; number 6, hold on for dear life, hodl; and number 7, remove crypto from exchanges. And if you're interested in reading my book as a way to get educated while you wait, it's available in paperback, on Kindle, and as an audiobook on Amazon. And I'll leave a link to it in the show notes. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.